So, should we buy or sell Abbott Laboratories? So, first off, read this disclaimer carefully. Here is Abbott's website. The virus hunt. See how we're partnering with experts around the world to slow the next pandemic. Okay, so they're onto that. Yeah, so this is it's a interesting website. I do like actually this design here. So I have a theme that I call internal bionics. It's in the megatrends. And Abbott Laboratories, they are into cardiovascular and neurology. So internal bionics is, mechanical stuff that is inside the body. 4% from the 52-week low, but it was still 22% away from the highs. So here is the long-term chart, weekly data points. Been public for quite some time, went public in 1995. Now, actually, there's even more data the further I scroll back. So it's been public for a very long time. Okay. The reason why this one popped up on my radar is because there is a pattern, a key pattern, which we call the double bottom. Does that mean that double bottoms work 100% of the time? Of course not. But this is an interesting double bottom. We do see that from some of the previous patterns in this stock, like here a bit double bottom-ish. It's not a clean double bottom, but you did get sort of like a bounce after retracement. Here you did actually get a double bottom, so it has a history. I'm referring to this of successful double bottoms. As such, yeah, that increases the probability that investors will look at this and be like, okay, this is an opportunity, and the bears are going to be like, maybe I will take my profits and find something else. Here are the daily data points. It is pretty interesting. Let's look at the other indicators. Weekly RSI is at a level that has a tendency to result in mean reversions to the upside, but we are not at extreme low RSI on the weeklies. The same goes for the PPOs. On the daily data points, we are emerging from a low level, but it's not like ultimate by a low. So the key thing we have here is double bottom. That is the number one signal at the moment. I will give an 8, okay, an 8 to the bulls on the technicals, but let's get the caveat out of the way. This 8 is of course contingent on double bottom holding. If this double bottom were to break, then this 8 disappears because the double bottom is not valid anymore. Okay, so here is the seasonality for Abbott Laboratories. You do get the seasonality forecaster to the left. Pretty decent seasonality over the last 5, 7, and 10 years, finally in red. Looking at the table, we are still in March. 4% loss so far for March, which makes it the worst March within this time frame. Going back to 2004, you could make a contrarian case that given that big loss, maybe a lot of bad stuff is priced in. If you look at previous big loser months like in 2004 and 2006, April was green. 2014, April was green and not a big win, but you did actually have wins the following months. Yeah, so there is a pattern here of mean reversions having worked in the past. April, it is recently it's been a bearish month, but when it is bullish, it can be really bullish with like a 16% gain for 2020. So, yeah. Taking it all together, I will give the bulls. Yeah, I will give them. I think I will give them a 5. Yeah, on the seasonality, this is pretty good, but it could be better. Next, we will look at the fundamentals. So, Looking at price book here, we are at a pretty interesting support level. It was support back here and did lead to this rally you see here. It was relevant back here as well. Looking at price to sales, pretty similar. We are at a very key level that many times in the past it worked. Price earnings is also relatively low. The yield is at 1.75%, which is a decent yield. Here are the analyst price targets, and they are very bullish. Minimum is almost 10% above us, average 26% above, and the highest is 44% above. So, yeah, the analysts are definitively seeing that, yeah, there's a value in this stock, especially at the current levels. So here on the fundamentals, I do think I will give the bulls a solid 7. This is really, really good. So when looking at relative performance, I will compare it against some of the most relevant healthcare ETFs. So the XLV is definitively a candidate, but when it comes to these others, we don't have. I mean, the closest thing I think would be medical devices. So I will pick medical devices and the broad healthcare ETF. So these are the long-term correlations between Abbott Laboratories and, first off, the S&P 500 at 85%, 63% with XLV, the broad healthcare ETF, 92% with the medical devices ETF. Short term, 57% with S&P 500, 66% with XLV, 82% with medical devices. So yes, what happens with the medical devices ETF is going to have the biggest effect on Abbott Laboratories. IHI, like that. This one, it's seen 2 weeks now, counting this week with gains. So it's on the move. So currently Abbott Laboratories is underperforming the ETF. Looking at the daily data points, decent move. Seasonality to the left, oh decent. March is a very green month, so very strong month for the ETF. April, messy. But looking at the sum here in the bottom, April is decent. So now let's compare them against each other. Go up here and then take IHI like that. Okay, so this is the relationship between the two. So Abbott Laboratories, it's abnormally underperforming the medical devices ETF. You could argue quite strongly that we are at the double bottom here as well. We are at a very key level on RSI that has resulted in reversions many times in the past. So there's reason to expect Abbott Laboratories to begin to outperform the medical devices ETF. Looking at the daily data points, extremely interesting level here on RSI. Yes. Looking at the seasonality, there is a bit of a tendency though for Abbott Laboratories to underperform into mid-April before it begins to outperform. Looking at April here in the table view, recently it's been bullish and bearish. It's messy. It's very binary. Taking it all together, I do think that on relative performance, very interesting stuff happening with Abbott Laboratories. Especially interesting to see that it is sort of expected to have a period of outperforming the medical devices ETF. So all in all, the stock ends up with 6.8 in favor of the bulls. It's a very, very strong bullish score. But the key entry signal is definitively in the technicals with that double bottom. If the double bottom were to fail, then it doesn't mean that all of the other bullish points are irrelevant. It's just that I do weight technicals more than the other factors. So it would be very, very unfortunate. But yeah, the bulls have a great opportunity here, and there's way more reasons to be bullish than bearish, but also a very good reason to have a stop loss, not too far below that double bottom. And if you want more of these types of analysis, then you can go to diamondarm.com.